traders, today I'm doing something that most traders struggle with, which is to do nothing. Today I'm not opening new trades. Today I am not chasing the markets, and I may not even place another trade next week. Why is this my scenario at the moment? Because all the work has already been done before NFP, before CPI, and before PPI. Now the market is just going to pay me. In today's video, I'll explain why I'm simply managing my current positions that I'm still holding on pound dollar, US dollar CAD, and euro. And also I will explain why gold it is still lagging behind without going to the top easily. Now, if you enjoy fundamentals and technical analysis combined, subscribe because that's what exactly we do each and every week. Okay, let's look at the bigger picture now. Everything started with non-farm payrolls, right? Employment slowed, and that told us the labor market was weakening. Then the CPI confirmed inflation was cooling. Then PPI surprised to the downside. Now, that is three major economic reports pointing to the same direction. Now, let's get into the market. First, starting off with the euro and the dollar, very simply put, with this euro and the dollar signal, one thing that I would have to highlight is that the euro and the dollar respected the sentiment of a weak dollar. Again, I'm not looking to buy anything, even if it comes here, it is more likely to come here and then find buying opportunities to the upside. But I personally, I'm not looking to get in there. Why? Because professional traders understand that once the market has already expanded significantly, the risk to reward becomes less attractive. Now we move to the pound and the dollar, very simply put. Now, traders, with the pound and the dollar, this is how we are looking. That's why I'm not trading. And pound dollar is doing exactly what is expected, right? I'm no longer interested in chasing the buys up here. No, I'm not chasing those buys there. Now I'm interested in protecting profits. There's a huge difference between entering a trade and managing a winning trade. Now I don't want to mess this up, putting in more money here, trying to be aggressive or to be greedy for that matter, but that's not what I'm doing. I'm already in. I'm just gonna relax up until profit taking, which also is not very far from what I am imagining. This is very closer to my profit taking. And traders, we have to go now to the US dollar and the Canadian dollar. And with the US dollar and the Canadian dollar, this is uh one of my best opportunities. It continues to be one of my strongest conviction. Why? Because with the US dollar combined, uh, the dollar weakness combined with the Bank of Canada holding rates steady has kept pressure on this pair. So unless we receive completely different microeconomic information, I'm simply letting this trade develop. And mostly it is also near our target profit. It is 60% towards my target profit, which is right here at 1.3923. These levels you get with the VIP. Now, traders, this is what it means for you to join the VIP. You get this kind of trading signals. This is probably the biggest lesson from today's video. Many traders believe that they must trade every single day. That's simply not the truth. Sometimes the highest quality trade is the one you have already entered. The hardest part of trading isn't finding entries, it's having the patience to let a good position work. Now, after explaining everything, let's see why gold is different. I would like us to zoom in back quite to back where the NFP was and to understand why gold has been behaving like this. Firstly, we have to understand what happened trade after trade up until now. So, with that being said, traders, here is one thing for sure. Now, here is the NFP, the non-farm payroll. The market shot up straight, and we we had two break evens, another break even here, a loss and a break even, a loss and a break even, a break even again, despite the CPI being the the leading force behind what we see right on euro dollar, pound dollar, and US dollar, Canadian dollar, and despite the PPI also adding pressure on euro and the dollar, nothing has been happening on gold. Now, here's why gold is a bit different. Gold has frustrated many traders recently. The dollar has weakened, inflation has cooled, PPI has cooled, yet gold hasn't still exploded higher with momentum. And why is that? Because gold doesn't only react to the dollar, it reacts to the treasury yield, Fed expectations, institutional positioning, and profit taking. Currencies respond much more directly to the dollar weakness. Gold often pauses while institutions rebalance positions before deciding on the next major move. That doesn't necessarily invalidate the bullish idea. It simply means gold is a more complex market than many traders realize. Now, traders, looking ahead, I am far more interested in protecting the capital than adding unnecessary risk. Unless the market creates completely new opportunities, I have no reason to force another trade. Sometimes discipline means doing absolutely nothing. Now, traders, if you want to see exactly how I positioned before NFP, before CPI, before PPI, and how I manage trades after they are already in profit, join my VIP signals for just $30 per month. Inside the VIP group, you'll receive exact entries, stop loss, take profit, break even management, live trade management, and updates, daily forex analysis. The free telegram link is in the description. If this video helped you understand why patience is one of the most and biggest edges in trading, hit the like button, subscribe, and turn on the notifications. I'll see you in the next market update. Bye bye.